Hey everybody, it's Chris Johnson with Money Morning. Everyone is asking the question, should I be buying Nvidia stock after it fell more than 15% in less than a week? Guess what? I went back and looked over the last couple of years and found all the times that this has happened, as well as studied the charts. I've got the answer for you, as well as the prices you should be watching for the best buy the dip opportunities. It's going to take 5 or 10 minutes. I don't care whether you're a bull or a bear on Nvidia. This is stuff that you should be watching and need to know. Let's get into it right now. All right, everybody. As I said, 5 or 10 minutes, and you're going to be better off, whether you're a bull or a bear on Nvidia, you're going to be better off for understanding why it pulled back and where the stock is heading or should be heading from there. Now, let me give you a little disclosure before everybody starts saying, oh, CJ's a bear on Nvidia. No. I did a video a month ago and said Nvidia is the most dangerous stock in the market. And there's a reason. I'll explain it right now. It's why the stock pulled back. But I am a long-term bull on Nvidia, just looking for an opportunity to buy it at lower prices. And yeah, I believe we could get a lower price than where it sits right now, just a little bit above $120. I'll explain exactly where and why right as we get through this. Let's take a look at why Nvidia's pulled back that 15%. Then we'll look at what happened over the last 4 or 5 years whenever this happened. So the average returns, etc. This chart tells you why Nvidia pulled back, though. This is why it's the most dangerous stock out there. It is the most loved stock on Wall Street, period. Everybody knows it. When you see the CEO at conferences signing T-shirts like he's a rock star, it's an overloved stock. I don't care what the company is, whether it's Procter & Gamble, whether it's Nvidia. We've seen all kinds of stocks that have held this title. Apple, back in the early 2000s, was the most popular stock on Wall Street, and it ran into the same problems. What happened with Nvidia over the last week, 2 weeks or so, is that they just saw this crescendo of optimism. We had a stock split, 10 for 1, that was announced after the earnings. It knocked the cover off the ball again. The stock is up 70% over the last couple of months because of all of that, right? Then we had a rebalancing last week of the Select Spider Technology ETF. That's ticker symbol is XLK. They flip-flopped Apple for Nvidia because of their change in, guess what? Market cap. They're the second largest company out there by market cap, only behind Microsoft. So that comes with a danger. When everybody loves a stock, it is going to happen where you're going to run into more volatility than the rest of the market. We saw the market actually go up as Nvidia was coming down because people were running to other areas of the market as they sold their profits. Let me give you an analogy real quickly that you'll understand. Let's say you're on a boat. I don't know what the length of the boat is. Say it's 50 feet, 100 feet, but you got 100 people on the boat. If they're all dispersed around the boat evenly and you go into a little bit of choppy water, the boat's going to be fine. You might get a couple people that are seasick, some volatility, but the boat's not going to turn over. If you take that same boat and put everybody right on the rail, right on one side of the boat, think about the volatility you're going to see then, right? That's what happens with Nvidia. Everybody has gone to one spot in the boat, the bullish side of the boat, which means if there's any opportunity for volatility, it's going to be rougher than normal. So that's why we saw a 15% pullback over the last week, and it's happened before. This is not the first time that Nvidia has seen that pullback. Since 2024, you've got 14 different instances. And I took out the duplicates where it happened within a couple weeks of each other, but 14 instances where Nvidia's pulled back 15% or more in a week, right? And for the most part, if you followed this as a strategy, just to say, hey, I'm going to buy the dip if it goes down 15%, for the most part, you did okay. There was a spate here or a run in 2020 and 2021 where you grabbed 63%. These are 3-month returns, 37%, 14%, 45%. But then you run into this run. And I'm going to show you what changed about the stock in just a second and how you're going to be able to determine whether this is one of those situations or not. But minus 10, minus 24, minus 31. So if you bought the dip, let's say it went down in February 15%. After you bought it, it went down another 24%. And if you bought it in April, a couple months later, after it went down another 15%, Guess what? It went down another 31%. So buying the dip felt pretty bad back then, and that's what we're going to avoid today with the target prices that I give you and understanding just a couple of easy trend lines. So we run into the end of 2022 and into 2020. Actually, there were no 15% pullbacks in 2023. The average pullback was around 10%, or the maximum pullback. So everybody was buying the dip in 2023. But we just had our last signal on April 19th of 2024, and we know what happened after that. The stock is up now 59% since that reading. Here's a breakdown of all of those readings for you. If you want, you can take a screenshot of it and actually see the details. But your bottom line is, anytime that you bought that dip over those 14 instances, you were up an average of 16% on the stock. So it did a little better than break even, but you know that if you were a long-term holder, you did very well on Nvidia. So there, if you're looking for the broad answer, should you be buying the dip? Yeah, go ahead and buy it. It's down 15%. Likelihood it's going to be up an average of 16% over the next 3 months is relatively high, as long as it's not 2022. What happened in 2022? Why is that chart so different? Why did you get those 35 and 40% pullbacks? Here is your chart from 2022. And this is just a daily chart with 3 simple trend lines, right? I'll identify them for you very quickly. This is your 20-day moving average, and that is important because we're sitting on it right now. You'll see that chart in a second. This is your 50-day moving average. It's just the average of the 50 last closes of the stock. It is also the trend line that is best embodies or quantifies the saying, the trend is your friend. And notice, as long as this is going up, it's a great opportunity to buy the stock. But once it starts to roll over, all those negative returns in 2022 were while you were in this bearish pattern on the 50-day. We're very bullish on that 50-day right now. But you can see it starts to get problem when you test it. Remember what this looks like. And then down here, that 200-day moving average is the big one. If I go back to that chart that we were just looking at, that long-term chart of Nvidia that had the actual, we'll get to it, had the actual signals there on the, there we go, on that chart. Notice that blue line in here. That is your 200-day moving average, the same one that I was just pointing out. And notice when we broke below it, the stock really ran into a long-term bearish run. So that's going to be one of those key trend lines that we'll be watching as I get to the current chart. But let's go back to that past chart. There's your 2021, 2022. We can see the stock topped out, tried to capture some support here at that 20-day moving average, and then failed and rolled back over and immediately tested that 50-day that I was telling you about. That is the key. That's the one everybody's watching. And then once we broke below that, it was off to the races. Nvidia turned into a situation where buying the dip was not the approach to follow. Instead, you had to wait until everybody was screaming in the streets and saying they didn't want to buy Nvidia anymore. It goes back to the sentiment, that chart that I showed you, despair setting in. So what does a chart look like right now? As long as we know we don't want to be buying the dip when we cross below that 50-day, we know that we should be watching that as the magic trend line, let's almost call it. Well, here's what that chart looks like right now. This is the last 3 months. Notice what happened here over the last 3 days. We ripped that 15% off, and we're testing that 20-day moving average. That's at the $120 price level. That's your first number to write down right now. If you are just looking for the first opportunity, right now is the time at $120. But there could be more. Understand that this is almost a coin toss over the next couple of weeks, whether we hold this level. You can see this consolidation here that we had right before that little extra push of momentum. Stock split, rebalancing of the XLK. There's your euphoric top, and we roll over, and now you've got a healthy correction. You break through that 120 level, which over the next couple of days, we'll have resolution on that before the end of this week, and it's the week of June 24th is what it started. Today's the 25th. If we don't hold this level, you're going to see sellers start to come into the market and really take profits. Remember, the stock is up 70%. And ironically, if I go back to that other chart, And this is the chart that we saw just a moment ago of Nvidia from back in 2021. Guess what this run was right here? 72%. So you've had 70% runs in the stock back in 2021, heading into 2022. And then we also have a situation right now where the stock in the last couple of months has made that same trek up to that optimistic top and is testing that same 20-day moving average. Watch this. That's the first opportunity to buy, and you do it sparingly. If I'm opening a new position, I just take a nibble, and that's what you're going to see the technical traders do. Take a nibble. And if we break through that, you're going to see more selling pressure. The volume's going to go higher. And once we hit that $100 level, you're going to see a lot of buyers coming in. Why will they be buyers at 100? You know, is it a magic number? It is a little bit. First of all, it's the side of where that 50-day moving average is. That is the most widely watched trend line on Wall Street, period. So the 50-day moving average will kick in, but $100 is a round number, just like 1,000 before the 10-for-1 stock split. Investors love round numbers. It can be the easy math about it. It can be a whole number of things, but historically, again, regardless of the stock, even the indices followed this rule. We just hit 5,500 on the S&P 500 and then started to roll over. So round numbers are easy to remember and easy to act upon by investors. So that's one of the reasons that you're going to see that support come in at 100. Now, what happens if that doesn't hold? Remember back in that 2021 chart that we looked at, that level didn't hold. See, we can go back here and you can actually see a bounce and then a crossover. But this, where that 20-day moving average crosses over, is where the danger starts. That's negative momentum on the stock. Now you have momentum working against the stock. We're going into a bear market at that time. Not saying it's a bear market now, but if I'm watching one thing, I'm going to watch how Nvidia reacts with that 50-day moving average. And if I back this out, and let's look at 6 months worth of activity. Remember, I talked about the 200-day moving average. It's all the way down here at $70. So that's where things really started to get ugly for Nvidia back in 2022. It broke below the 200-day moving average. That is exactly how I play this. So use your piece of paper and your pen right now and write these numbers down. Your first level of support is at $120. That's where you're going to see some shorter-term traders coming in to buy. $100, you'll see some intermediate people with maybe a 4-6 month outlook start to come in and buy the stock. But if at any time that 20-day moving average crosses below the 50, first of all, you'll hear from me as long as you like and subscribe, because I will be here talking about it. But your next level, after you break through that 100, it's actually going to be here at the 80, because that's where we broke down and actually tested. Think of this, guys. It has only been a couple of months since we traded at the $80 level. If you look at how far down that is, you're talking about that 70% return. So a pullback would be, in this particular case, from that high that we saw down the 80 is going to be a 35% pullback. For most stocks, you're going to be saying, oh my gosh, this stock is done. Remember, this is the most popular stock on Wall Street. There are more potential sellers holding the stock than there are buyers waiting on the sideline to buy it. But you'll see some rotation come in at that $80 level, and that 200-day moving average should be sound down at $70. My next level to buy after breaking 100, if we break 100, turns into $80. And you basically dollar cost average yourself into a stock that was just trading at $140 for $100 a share. From there, I continue to look at that 200-day moving average, and as long as we remain above that and the 50-day, we get above the 50-day, this remains a long-term buy, which I believe truly that it is. Here's your summary, just real quickly, so you can get an idea of the numbers I'm watching. It's seeing short-term support, Nvidia at its 20-day moving average. That's $120. Longer-term investors are going to be looking to open a position. They may consider this point to just take a nibble on the stock if you don't have a position. I'm not adding right this second. I'm going to wait to see if we get a little resolution. But The stock should be given some time to ensure that we get volume and confidence coming in at that 120. Otherwise, it's going to be the 50-day moving average that is the next target. That's at $100. You'll see heavy buying coming in on a break below that psychologically important level, and that 50-day moving average starts to target the $80. You want to watch for volume, and you're going to see a lot of analysts come in and defend the stock at $100. That's going to help as well. Remember, we've got some summer months coming up here where volume dries up, stocks get a little more volatile. September's a worse month for the market historically. It's not October. That's a turnaround month. We'll talk about that in a couple of months. But look for any of that weakness to add to Nvidia's downside because, again, there's a cost of being the most popular stock on Wall Street, which Nvidia still is. If you haven't checked out that video, make certain that you do. It's in the library right here on our YouTube channel. Like and subscribe so you can get more of this information. We'll do it more timely, and we've got some guests that are also coming on to talk about the market over the next couple of weeks. Check out my talk about the Dow theory last week or so, because it's got some implications over the market over the next couple of months as well. Until the next time, I'm Chris Johnson, wishing you the best trading success. Come and visit us at moneymorning.com for more market commentary as well. Have a great day.